Hello, this is Dean Malone with Compass Effects. I hope you're doing well today and you get some good trades. We're definitely in the summer months. We come to the end of June, into the second quarter of 2015. And with the summer months, we have volumes that lighten up and we find some of the currencies finding themselves in typical summertime ranges. The pound dollar is no different. Here we are in a 140 pip range over the last week. Now, where do we go from here? Well, into the London session tonight, we're going to get the manufacturing PMI out of London, which is expected to be better. We're also going to hear from Governor Carney. We're going to also get the financial stability report for Great Britain. Well, let's take a look at where we're going to go from here, because in this week, not only do we have Governor Carney coming out in these reports, we also have non-farm payroll, which can always be an up and down situation. And we're going into a bank holiday for the U.S. So with all that said and done, let's take a look at the pound. The pound, like I said, was in this 140 pip range. Today in the DOTS trade room, we had a couple of good trades in the pound and some of the pound related pairs. But with this tightening of the range, I would suggest monitor the open of the day. If you monitor the open of the day, you're going to look for the bias of the day. And I've talked about this before. If the market trades above the open of the day, look for a long bias, especially if the market comes back and tests. So here we are. Now, right now, the market's trying to play below the open of the day. In this case, we may look for a test up. Now, I'm going to talk about a little bit more in detail, but just from a 4-hour perspective, you can see the 158 up here, the 156.60, that's our range. If you look at the pound on a 4-hour basis with the DOTS guppy applied to it, the long-term guppies are suggesting continuation to the upside because they haven't necessarily rolled over, even though the short-term guppies have penetrated down into this area. But everything's going flat. So what this means, based upon the Guppy multiple moving averages, is that both near-term traders and long-term institutional traders are kind of like A-okay with this little level that we're in. Let it kind of bounce around until we have some sort of fundamental news, some economic event that's going to drive the market one way or the other. So let's take a look a little closer in and give you my thoughts. I see two near-term resistance and support levels. And that's based on some repeated lows and some repeated highs. So from the lows perspective, if you zoom in just a little bit here, we're at the open of the day. The market's trying to play down a little bit. So if it comes down into this area right around 56.80, I'm going to look to see if we get a break and a continuation, or I'm going to get a bounce and a push away. The last time we got down into this area, it pinned low, almost at the 56.60, and then back up. So we're going to look for this little area here around 56.80 as a near-term support level. The longer-term support level a little bit out is 56.60, and then from there, then there's that potential push down lower. Some are looking at getting beyond 56.40 and on down to about 55.50. Now let's look at the flip side. We have a little resistance level up here, near-term resistance, a little area of repeated highs. Again, when you get repeated highs, that's going to be a resistance area. We're going to look to see if the market's going to push up there, try to break through. If it can't break through, we look for a bounce down. So in this situation, drawing these little levels, noting the repeated lows, noting the repeated highs, gives me an idea that, hey, if we get up this area, okay, from where we're at, getting up in this area, about 40 pips up in this area, I'm going to look for a potential bounce. Now, if it grinds through that, I'm going to look for a test of this before a potential push up to 158. Same thing goes here. I'm going to look for, if it drops below this and grinds down, I'm going to look for a test of it. And if it bounces back and holds, then I'm going to look for a continuation down. Okay? Now, if I take this down to about a 15-minute chart, look at the near-term situation, you can see that we're kind of bouncing around. There's no real certainty yet as to where the market's going to go here. I look for a break below the buy stop loss level for continuation down. Okay, and this is referring to the trading away from the open, looking for that bias. If the market comes up, gets above this sell stop loss level, just another level in the market, and can hold that level, then I'm going to look to see if it will push on up, and that may give me my bias to the upside. So right now we really have an unclear picture in the pound. But I do want you to note this. Look for the market to test into this 56.80 area. The market bounces off the area, then look for the trade back to the daily open. If it breaks it, look for the test down to 56.60 and then potential continuation. Possible bounce and a test there. Now, if Governor Carney comes out this evening and makes a strong positive expectation on Great Britain's economy, then this is going to shoot on up. It's going to get through this near-term level of resistance and then push on up to 58. And again, if you step back out to this 4-hour chart, we're going to look for previous levels. So if we break 58, I'm going to be looking for the market to come right into this area here. That's going to put us about that 58.40, 58.50 area. So look for the push up to that. It sits on top of that. Then we make that next push up to 159, where a lot of traders are expecting the push on up to. After that, we'll look for a floor to hold the pound to the upside, and then possibly on the way to 160, as many traders are looking for. So that's my plan of action. I'm going to just wait it out, see what happens here. If Governor Carney's expectations are better than expected, then we're going to look for that punch to the upside. If his comments are to the negative point of view, then I'm looking for that push down to about that 55.50 area. Right in this area here, you have a high, you have a little congestion, consolidation here, you have some lows coming in this area. This is a 4-hour chart, so this little area right in here is going to be an area to look for if the market cannot seem to hold up here. So down to this level, or a punch up towards the 59 area. So when it comes to trading summertime ranges, this is what you have to do. There's some uncertainty as to what the market may do. All you got to do is plan for the market to go either way. Be neutral and plan for the market to go either way. Well, this is Dean Malone with CompositeFX. Hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. Take care. Bye-bye.